Hi, my name is Brian Dager, and I'm working alongside First Insurance to bring voluntary supplemental insurance policies to the americare employees. Our office is in Defiance, Ohio. My team works exclusively in the voluntary supplemental market. We're looking forward to working with the americare employees with the new short-term disability, accident, cancer, critical illness, life insurance, and hospital policies. We work with the top supplemental companies to make sure the employees have the best plans the market has to offer. And in this PowerPoint, we're going to walk through the concepts of supplemental policies, provide an overview of the prices and benefits. And sometimes individuals think, well, I have insurance. Why would I need a supplemental plan? Well, supplemental benefits are here to assist with out-of-pocket expenses not covered by major medical. And those out-of-pocket expenses are typically lost wages, co-pays, deductibles, and for the more serious health events, travel, lodging, and a caretaker expense. When using a supplemental policy, it's important to know it's a cash benefit paid directly to the policyholder. There are not any co-pays or deductibles. And there are no rate increases. I strongly emphasize the part regarding no rate increases. This is a rare feature in the insurance industry. Now, when considering a supplemental policy, it's the same as any other financial consideration. Why would I buy it? What is the cost? What are the benefits? And in life, there are always financial risks, and sometimes it makes sense to self-insure or save for those risks. These are sometimes called rainy day funds. And sometimes it makes sense to insure those financial risks. Now, I'm a fan of saving money in an HSA tax-free, but it can also make sense to use insurance dollars rather than the rainy day fund or the HSA dollars, or in addition to the rainy day fund and the HSA dollars, so that some of those dollars in the savings and HSAs are preserved. Supplemental insurance can be especially important for those individuals who do not have the rainy day fund or a well-funded HSA. In this event, individuals sometimes sell assets, tap into other investments such as retirement, or borrow money from friends and family. When a health event occurs and you experience those lost wages or deductible payments and travel and lodging payments, supplemental policies can help preserve savings, HSA dollars, and protect other investments. And as importantly, provide peace of mind during this stressful time. Now, oftentimes we think these plans are just for individuals who might not have the savings or the rainy day funds. However, some policies with property and well-funded retirements and other assets, such as antique vehicles, they use these supplemental policies to preserve those assets. I show this slide in all my accounts. I realize that sometimes the different functions or purposes of each policy can get confusing. I think it provides a great visual of how the supplemental plans work in regards to what risks they help with or do not help with. And this just shows us the basic premise that medical expenses come as a result of injuries or illnesses or conditions. And the following slides will show you how each policy fits in. This slide shows us how the policies fit in to managing the risk of our out-of-pocket expenses for those injuries and illnesses. We'll go through each policy and continue to refer to this puzzle to explain how they fit in. And the first I'll go over is short-term disability. Short-term disability is very simple. It helps replace lost wages that occur during an injury or illness. As you can see, the diagram shows it extending across the entire spectrum for injuries and illnesses. So when a physician provides a statement that an employee is unable to perform his or her work duties, a selected benefit amount is then paid to the employee policyholder. So here are the short-term disability plan details. Benefits will begin on day 1 for injuries and day 8 for sicknesses or conditions. The benefit will pay for a period of 6 months. The policy is guarantee issue, which means there are no underwriting requirements to have the coverage. To best determine the need for disability, simply ask yourself, if I were unable to go to work due to an injury or an illness, what amount of income would I need to make sure I can pay my bills? Sometimes individuals will ensure they can pay for just some of their bills with their selected benefit amount, and sometimes individuals ensure they can cover all of their expenses with their selected benefit amount. Once you determine if there's a need, you can look at the weekly benefit amounts that go left to right across the top of the rate sheet. Then along the left side, up and down, you'll find the age brackets. And this is how you determine the premium that would be deducted from your pay to have the coverage. We will have agents available by phone in each location to answer questions, provide full plan details, and show you the enrollment procedures. Accident plans are typically the #1 selling policy in the supplemental insurance world. I think it's because it is the one that's most often used. We have found a fantastic accident plan that I know you're going to love. The accident plan differs from short-term disability in that It is only for injuries that result from accidents. This plan is very affordable and does cover one full side of that spectrum we talked about. That is injuries. Accident plans are typically the number one selling policy in the supplemental insurance world. I think it's because it is the one that's most often used. We have found a fantastic accident plan that I know you're going to love. The accident plan differs from short-term disability in that it is only for injuries that result from accidents. This plan is very affordable and does cover one full side of that spectrum we talked about. That is injuries. So before I talk about the plan benefits, I want to go over the cost first. In the top right-hand corner, you'll see the biweekly and weekly cost. Then at the bottom, you see two examples of what the actual net cost every year would be. In the first example, we can see employee and spouse coverage. The total cost is $204.36 a year. However, we're going to pre-tax this on your paycheck, which will discount the plan $40.87 in tax savings. Then there's a physician benefit. The plan includes a physician benefit that pays 4 times per family per policy, or twice for employee-only coverage. The great thing about the physician benefit is you can use it for any physician visit for any reason, including dental, vision, chiropractor if your kid gets the flu, or anything. And this is different from the traditional wellness benefit that most carriers offer on their accident plans. When including the 4 $50 physician benefits, the policyholder and spouse actually end up with a net gain. We work hard to make sure you know how to receive those physician benefits. We have packets created that we put at each facility, which include the physician benefit form. You just send in your physician bill along with the physician benefit claim form. It takes about 30 seconds to fill out, and you'll receive the physician benefit in typically 3 to 5 business days. To add to the good news, we haven't even mentioned all of the injury benefits on the policy. Slides 11 and 12 in the PowerPoint go over all of the policy benefits. The plan does include accidental life insurance that is not shown in the slides, but you can see it in the attached brochure or in the brochure that the agent will provide for you at enrollment. Some of the benefits that should stick out to you, which are an increase from accident plans you've seen in the past, include an emergency room benefit of $200, an x-ray benefit of $200, and a fracture and dislocation benefit that are probably 2 or 3 times what we typically see on other accident plans. Now, besides those highlights, the plan provides benefits for minor to major injuries, including back and neck injuries, sprains, fractures, dislocations, hospitalizations, cuts, burns, torn tendons and ligaments, and many more. Now, to show you what we mean, slide 13 provides a couple of claims examples that we typically see used a lot on this plan. Like we said, this accident plan is for minor to major injuries, even back or neck strains as seen in the first example. So here's something interesting. If you go back to slide 10 and look at the cost for a family to have this policy, then you come back to slide 13 and see that you'll receive $100 to $200 for a back or neck injury being checked out by a chiropractor. You can see that with one little minor injury, you've received all your money back on the policy without a rate increase. So it's great for minor injuries. You'll be glad you had it for things like fractures and dislocations. The real reason for the policy is the major accident. And I've assisted a policyholder with a $39,000 claim. The policyholder was hit by a drunk driver, spent 4 months in the hospital in ICU, was in a coma, and had several cuts, burns, fractures, and surgeries. In thinking about accident plans, here's one thing to keep in mind. You can cover the entire family. That's really important. So if something did happen to a covered spouse or child, the benefits received on this plan are going to allow you to take time to be with the injured family member. Without the policy, FMLA would guarantee your job, but not even a disability plan will pay you to miss work for someone else's injury. And we had a policyholder whose child almost lost both legs when a mower rolled over on top of her son when he was out mowing on a slope. And she was able to be there with her child at the hospital because her cash benefit on this accident plan was $9,200. I spent more time on this policy in the presentation because, as I stated earlier, it is the plan that people participate in and use the most. And the next plan is the hospital plan. The hospital plan is a very simple plan. It provides a benefit of $2,000 with a $100 daily confinement benefit if a covered person is ever hospitalized. The plan highlights are there is a true waiver of all pre-existing conditions. And this waiver includes pregnancy. We have a lot of young adults in the maternity stage of their life that use this policy. Also, individuals who have conditions which increase the likeliness of hospitalization find the plan to be more valuable. So here are the hospital plan rates. I always think it's important to balance the cost versus the benefit when determining whether or not an insurance policy makes sense. I always like to show the cost example for maternity. So if Sally pays $297 a year at $11.46 a pay, receives a benefit of $2,300 from the hospitalization during her child's delivery. To make financial sense of this, we simply take $2,300 of benefit and divide it by $297 in annual cost. This means Sally has 7.7 years before she would not have made a return or a surplus on her investment. So if Sally were to purchase the policy and deliver 1 year later, Sally would have made around 7 times her investment. With the waiver of pre-X's, Sally could actually purchase the policy even if she's already pregnant and still receive that benefit. So this is the critical illness plan. Now the next slide, slide 18, is going to show the full policy benefits, but this shows how it fits into the risk puzzle. The plan pays a lump sum diagnosis benefit. Some similar plans in the past would pay benefits for various treatments or traveling expenses or hospitalizations. Well, I like a lump sum diagnosis payout because the claim is very simple. The critical illness plan is very comprehensive. It's not just a heart plan. It's not just a stroke plan. It's not just a cancer plan. So when considering whether this plan is for you, I think there's some important things to understand. We do know cancer is the #1 cause of bankruptcy. There's not even a close second. And I will attach several studies from Duke and Harvard to show the cancer diagnosis rates and why so many people struggle financially when dealing with cancer. These are important factors to measure when determining if a critical illness plan or a cancer plan is for you. I do want to emphasize there are no rate increases with this plan. So whatever age you sign up, that will always be your rate. I realize younger people aren't typically concerned with these critical illnesses. Well, you're not completely exempt, as we all know stories of children and young adults who have been diagnosed with the list of critical illnesses. However, while I understand your low risk, it's important to remember when you do enter your 40s and 50s and 60s or your high risk years, your rate is still going to be the age at the time you signed up for the policy. It is also important to consider you're going to receive a $50 wellness benefit when you simply call or tell the insurance company that you've received a qualified screening. Typically any blood screen would qualify for the $50. And at that point, especially after receiving the $50, the plan is very inexpensive. So here's an example of what the cost would be for a $10,000 benefit. Now it's important to remember that you can choose up to a $50,000 benefit. And one really neat feature about this critical illness plan is that you can cover the spouse and child at 100% that you would choose the employee. Now that would be a separate rate, but that is very rare for critical illness plans. So we're excited to be able to offer that. So this shows just a standalone cancer plan. One of the drawbacks of a critical illness plan is that it is age-banded, meaning that it's more expensive for those individuals who are higher in age. The critical illness plan also has separate, more expensive rates for tobacco users. And as a result, many people prefer just to have a standalone cancer plan, which is the same cost for everyone, whether they're 20 or 50, and it does not base rates on tobacco use. Now, our policyholders are our #1 priority, and we want to make sure you can use the policies when you need them. With the policies that receive the most use, accident plans, we want to make sure each location has claim packets with claim forms, policy benefit details, instructions, a checklist of items to request from the medical facilities, tips to remember, fax numbers, and our phone numbers so that we can assist when needed. During the time of claim, you can grab a claim packet, fill out the claim form, it takes about a minute or two, and then call the medical facility to request a list of documents and send them to the provided fax number or email address.